So, as of the beginning of 2022, when Bitcoin was around its all-time high, I had about $20,000 worth of crypto in my wallets. And to make it clear, this is all investments I have, and I think I messed up, guys. I decided that I would stay invested no matter what, as all the recommendations on the internet say. But just due to general depreciation of coin prices over these 2 years, my portfolio, which consists of 20 plus coins, depreciated by about $3,000. That's almost the cost of the brand new Apple Vision Pro gone, but let's not dwell on it because that's just the tip of what can happen with investments in crypto. Let's dive into the specific stories that will make you wonder, how can I even afford a cup of noodles? Each of them led to even bigger losses, and at the end I'll sum it up and tell you what I'm planning to do to get out of this crypto crater. I must say, investing in crypto is quite an enjoyable activity. Waking up, checking your stash and seeing those digits multiply like bunnies, it feels like the party will never end. And even though your brain knows the mantra buy low, sell high, let's be real, fear of missing out is a heck of a drug, and I found myself adding more coins to my stash. This is a common mistake made by all beginners who enter the crypto market when a new bull market starts. When I was just starting with crypto, on one hand I didn't yet understand how overvalued a coin was, on the other hand I didn't have the experience to understand what price the crypto was trading at a year or two ago, and spoiler, most likely hundreds of times cheaper. So every 5 to 10% drop looks like a great buying opportunity. What to say, even news of growth made me buy. The project is developing, that's good, isn't it? So I invested in DOT at $25 and Near Protocol at $7, both promising blockchains with great potential. And don't get me wrong, these are excellent blockchains with huge potential in the next bull market. Both of these investments nearly doubled at their peak, however, I didn't cash out. You know, when you're surfing the crypto wave, it's hard to imagine the right ending, so I didn't plan on selling these coins, figuring they would be worth big buck down the road. Well, the reality had a different script. And don't forget, crypto is just a small fish in the giant ocean of global economics, which was already experiencing tough times at that moment. And naturally, crypto, as the riskiest asset, crashes the most in any crisis. Ignoring these realities, I didn't take any profits, which can be a wise strategy for traditional long-term investing in stocks like Apple or Walmart, that's solid companies with actual profits and customers, but in crypto land, the losses are next level. So, if you didn't manage to offload your coins before the bear came knocking, you've got two scenarios to contend with. Scenario number 1. The coin's price drops by over 90% and remains on this depressed level for several years, and in the next economic cycle it might rise back or a little higher. And I hope that at least my case, because I'm down about $1,000 on my investments in DOT and $1,000 on Near Protocol. And then, that sounds like a whole month of work. Don't repeat my mistakes. But this also means I could have had 10 times more coins if I had sold at the peak of the cycle, or I could have had a ton of cash and buy back the same number of coins. So, what's scenario number 2? It's part of the ride that gets really scary. Have you heard of initial coin offerings or ICOs? They present an opportunity for significant profits, similar to how large investment funds invest in startups during their early stages. In crypto, this opportunity is also available to typical investors with relatively small investment amounts. However, this power can be a double-edged sword, as I personally experienced during the last bull market. I once met the founder of a crypto project centered around NFTs and the creator economy. On paper, everything looked super cool, a big protocol for creators where anyone can create their own NFT marketplace like an Instagram page, where you can finance industries, earn royalties from it, and so on. I think this is a once-in-a-lifetime opportunity, being one of the first to learn about a huge project that is just starting up and will make a significant contribution to the NFT industry. And so, dear investors, should I invest in this brilliant startup? On one hand, investing during early stages can yield substantial returns. For instance, it's common to hear about successful ICO participants turning $100 into $10K. On the other hand, the reason investment funds reap large profits from ICOs is due to the high risk associated. Only a small percentage of startups will successfully launch their product, and even fewer will become billion-dollar companies. Anyway, I decided to invest about $400, and do you know what happened next? Oh god, how naive I was. The project hasn't even launched yet, and the coin's price has fallen by 99% a few weeks after launch. The CEO, CTO, and others have left the company, leaving investors, including myself, with a disappointing investing experience. This explains why some coins experience a 99% drop in value during a bear market. These drastic falls often indicate that the project had no real value, or perhaps early investors and founders sold their coins, or that development consisted only of marketing efforts. But this is not the whole story yet. Have you ever had one of those eureka moments? I had mine when I realized that this big NFT Web3 creator economy project was set to launch on the Octopus network, and I figured it was the perfect time to get my mitts on some Octopus tokens. Priced at $2.50 for a token, it seemed like a steal. The thought process was simple. If the NFT Web3 creator economy project blows up, so would the Octopus network. Moreover, I had the opportunity to stake my Octopus tokens and earn additional tokens from this NFT Web3 creator economy project. It seems like the perfect money printing machine, right? However, as my previous investment narrative suggests, this endeavor didn't end positively. The Octopus token's value plummeted to 17 cents, resulting in a loss of $2,400. The project I mentioned earlier is still not launched, and Octopus Network still has not gained mass adoption. I somehow managed to lose more money on my so-called brilliant scheme than on the shaky investment from before. Now that's what I call an art. Fuck. This is probably why there is a golden rule in investing. Never bet more than you're willing to lose. Looking back, I invested way too much. That's because when you have crypto, it feels like it's fictional money. Technically, I can't pay with it in the store, but still, I can exchange, for example, Shiba Inu for USDC, cash out, and use that money to buy groceries or new filming equipment. That's the magic of crypto. And so, once I get paid in a coin that no one has ever heard of, let's call it XYZ from Cool Story DAO, and it was a decent amount for me at the time, something around $2,000. But where is the fun without a bit of risk? I assume that if more DAO members accept XYZ as payment, its value would rise, potentially increasing my initial $2,000 twofold or more. Sounds like another money printing machine, right? Fortunately, I had the sense to secure $1,200 in profit and left $800 to play the game of fate. At the time, it didn't feel like much, and guess what? That $800 is now a grand total of $23. So let's sum it all up. As you can see, my journey through the cryptoverse has been an adventure packed with pricey lessons. My new mantra is no more losses, or at the very least, stop treating crypto like it's play money. If you have similar stories, feel free to share them in the comments below, so we never repeat them again. And I feel that a new chapter is starting in my financial adventure. It's time to make financially sound decisions and stop gambling money right and left. So subscribe to the channel if you're interested in finding out my plan to get out of this financial disaster, and see you in the next one.